Think Realty Nation, it's Abhi Golhar. Welcome to the Think Realty podcast. Excited to be here. There's a lot of good stuff in this show today. And you want to get your crayons, colored pencils, markers, Sharpies, pens, whatever, and start taking some notes. We're going to speak with my good friend Daren Blomquist, who's the Vice President of Market Economics at Auction.com. And Auction.com recently released a Q1 distressed market outlook. And it's kind of an interesting topic, kind of given where we are. You know, everybody has this idea that there's some type of recession that's looming. And I think this is good data to go through. And as much of a nerd that as I can be, if there's one nerd that's bigger, he is bolder, he is significantly better looking, it's Daren Blomquist. So I'm going to bring him on in just a second. It's going to be a lot of fun. And then following that, we have a really good, quick little segment with my good friend Ray Urrutia, and he'll be offering some tidbits on how you can become the bank. So it's going to be a lot of fun. Stay tuned. This podcast is brought to you by Roofstock. If you're ready to buy your next investment property, then check out Roofstock, the #1 marketplace for buying and selling single-family rental homes. Featuring tenant-occupied rental properties for sale in over 20 states, Roofstock makes it easy to invest in cash-flowing real estate outside your local market. And to help you invest remotely with confidence, all properties are backed by Roofstock's industry-leading 30-day money-back guarantee. Sign up for free today to find your next cash-flowing rental property at roofstock.com/thinkrealty. All right, Daren Blomquist, welcome to the show, my friend. How are you?
I'm doing great. Thanks, Abhi. How are you?
Hey, you got it. I'm great. I'm excited to have this conversation. So Auction.com recently released this report on the Q1 Distressed Marketing Outlook for 2019, and it's a very interesting PDF. I mean, I have it pulled up here. Like you said before we kind of got started, let's see, there it is, Q1 Market Report, super cool. You've got a lot of interesting information. Scrolling down, first page, average foreclosure auction prices increased 7% from a year ago to a new high in Q1 2019. The next page, future foreclosure auction, supply shifting west, more distressed homeowners avoiding for. I mean, this is very interesting information. So give me some background, who you are, what you do, and let's dig in.
Yes. Daren Blomquist, you already introduced me. I've been here at Auction.com for about 6 months, really charged with looking at the market, the larger housing market, and how that integrates into our marketplace. We consider ourselves a microcosm of the larger marketplace. We're selling over 60,000 properties a year that are in the distressed, specifically foreclosure properties at the foreclosure auctions, and then which are typically at the courthouse steps, and then also the bank-owned auctions, which are online. And with 60,000 transactions that we have a lot of data around every month, both on the buyer side and the seller side, we have a really rich data set to work with. And really, we're accounting for, especially on the foreclosure auction side, we're accounting for close to 50% of all of those auctions nationwide. So we really are the marketplace, or at least able to project into the marketplace. And so it's been exciting to be here and start looking at how our data integrates with and relates to the larger marketplace. Typically, distress is thought of as a lagging indicator in the marketplace, but I believe that there's some of our data that speaks to as a leading indicator of what's happening in the marketplace. So if we get a chance, we can talk about that. And sure. So that's what I'm doing, and that's why I'm here. Love to dive into the data.
Awesome, let's do it. From a high level, what does this report? I mean, you're looking at about 7 pages. Summarize that for me. What are my big takeaways from reading this Q1 report?
Big takeaways are that there's a lot of demand for distressed properties, where the hot housing market means that there's a lot of investors involved. That's pushing up even distressed prices, even though you still get about a 20% discount, which we talk about on buying at the foreclosure auction, which is great. that discount is over the years been shrinking, and the prices on distress is going up because of that demand. So, to me, the leading indicator there is that real estate investors, at least at this point, are still very bullish on the housing market, despite, a lot of people talking about, when is that next recession going to hit? When is the market going to crash again? At least the investors we're seeing transacting on our platform are still very bullish. They're willing to push up the prices. Higher percentage of properties that go to the auction are actually selling, which is another measure of that demand. My kids say I say measure wrong. Sorry about that. Measure of demand in the marketplace.
It's okay. I mean, it's potato, tomato, tomato. It's kind of the same thing anyway. So shouldn't that then worry me as somebody that's going to an auction? Georgia has Super Tuesdays, right? And I don't know how many properties are sold during Super Tuesday in Georgia. We have a whole heck of a lot of counties here, and it all happens on a Tuesday. It's the first Tuesday of every month. And what's unique is I'll go to the one, say, Fulton County every now and then. And 4 years ago, not a whole lot of people. 5 years ago, not a whole lot of people. 2 years ago, I started to see more, and now it's like a flood. What does this tell me? Should I be more conservative, and if my numbers don't work, just abandon the bid altogether?
Yeah, and we like to think that we're a part of that, pulling demand into the foreclosure auction and making it a true marketplace where there are a lot of buyers, and that's good for the sellers. We do want to create a more transparent marketplace, but certainly as a buyer, you need to go in with eyes wide open that you're going to have some competition. This isn't a hidden marketplace anymore. This is a more visible, transparent marketplace. That said, there are still, not everybody can buy at auction. There are still obstacles to that. So yes, as a buyer, I think you need to stick with your numbers. And it is easy to get caught up in the frenzy of the bidding. And so you just have to guard against that. But that said, we're seeing, and Super Tuesday is something we look at quite a bit. Texas and Georgia are the two states that do Super Tuesday. And that's a lot of times the interest we see in Super Tuesday prior to the auction, people going in and looking at properties that are up for the Super Tuesday auction is a great indicator of how healthy the market is. And in recent months, we've been seeing a lot more interest in those Super Tuesday auctions, which then translates into more demand. And we see the overall housing market actually tracking that, and even see strength in home price appreciation correlated to that strength in the Super Tuesday interest. But yeah, as an investor, it's not that hidden marketplace. There are still a lot of deals to be found, but you got to stick to your numbers.
Yep, stick to your guns. In this report, you said, quote, scheduled foreclosure auctions provide a forward-looking metric for distressed inventory, and the increases we're seeing in many of the Western markets signal more distressed sales in that region over the next several months. And got a couple more paragraphs here. States posting year-over-year decreases in scheduled foreclosure auctions included New Jersey, which was down 18%. So talk about that for me. You got Jersey that's down 18%, Florida that's down 15%, Illinois down 6%, New York down 6%. What does that kind of tell me about those markets? Should I maybe look into these markets for opportunity or maybe stay away?
Well, what it tells you is the inventory of distress is going down there. Those have been, especially the Northeast, New York, New Jersey, have been the epicenter of distressed inventory over the last few years because they still had quite a big backlog of foreclosures left over from the housing crisis. But we're seeing that dissipate and fewer. There's still a lot of inventory there. It's still the biggest, most inventory is there in the Northeast. But it is decreasing. And so as an investor, the window of opportunity is starting to close in those markets is what I would say. Maybe not close, it's never completely closed, but it's starting to narrow in those markets.
Okay.
And And so I think you might want to start looking west. Now, the West doesn't have as much inventory, but we are seeing increases in the inventory coming to auction. Somewhere like Nevada and we're coming off of a very low number there, but 118% increase in scheduled foreclosure auctions. California, 16% increase. So those markets are where a forward-looking investor might want to turn back to. You might have thought there's not really any opportunity in the West. You might want to start looking there again.
Yeah, I'm looking at, and this is page 5. It says distressed demand bouncing back. I love these titles, by the way. They're perfect. And you can see a heat map, the map of the United States foreclosure auction sales rates. And I mean, it's looking like Idaho, New Mexico, Arizona. I mean, you're looking at some pretty interesting percentages there. I don't know if we can. Yeah, there it is. Anyway, that map is what you want to take a look at. And for me, I mean, it makes sense, right? Like, I need to go. If I'm looking at identifying where the next places to go for inventory would be, maybe it's the states that are in red. What are some additional metrics that I should be looking at that also justify, say, finding states and finding cities, say on this map, that verify that opportunities here exist and they're good and that I can hit that 20% number that you mentioned previously? Sure.
Actually, I mean, this map I find fascinating because there's the hottest red states really reflect probably the strongest housing markets in the country. Demographics are pushing people to places like Arizona, Utah, and Idaho. You see that strip of red down there, kind of not the coast, but the West still. And a lot of that is people moving from California and from Washington. They're moving inland to those not coastal markets. And so those are great places to invest. Now, there's a lot of competition there, but you have demographics, population gain in your favor in those markets. The other thing, I would look at the last page of the report, which is the discounts. So basically, when we're selling at foreclosure auction, where are properties selling furthest below market value? And you still see that centered in the South and the Rust Belt, where you're getting the best discounts. So inventory is going down in Florida and in parts of the Rust Belt, but there's still the inventory that's there is selling at the biggest discount. And so I know that may sound like mixed messages. You want to be looking at the West, I think forward looking as inventory increases there may be opportunity, but still, if you want to go find discounted distress where you're getting below that 20%, 20 to 30% types of numbers, you're going to want to go to the South, the Midwest, and the Rust Belt for some of the biggest discounts. And those by the way, anybody can download this report at auction.com/in the news. And the heat maps, you can click on those and they're interactive and you can go in and see the specific data in your market. For instance, just looking here, one of the hottest red dots is Pittsburgh, where the discount is about 38%. So properties selling there at foreclosure auction are selling 38% below their estimated market value.
Wow.
And by the way, that's conservative because the market value we're using is the lenders who are selling the properties they're going in and having a BPO usually done of the property to estimate market value. So it's not just an automated model. It's not really what I would call after repair value. It's distressed value of that property that they're looking at. So it's, there's some good discounts there.
I keep hearing Pittsburgh and like Pennsylvania, so I might have to take a look at this. Do me a favor. I don't have the interactive map on me. I just have the PDF download. Click into Indiana, the two states, Indiana and Ohio, and what do you see? What does that tell you?
Yeah, and I picked out Pittsburgh kind of randomly there, but if we look, there is a lot of the orange to dark red in both Ohio and Indiana. Now, In Ohio, the exception, Cleveland, you're seeing about a 28% average discount at the auctions.
Yeah.
But then the exception is Columbus, where you're seeing it under a 19% discount, which
it makes sense. I mean, college
it makes
town.
sense. Columbus is a little more higher demand.
Yeah.
So, let's see. Cincinnati is a 28% discount, similar to Cleveland, actually there.
Yeah.
Indiana, you have Fort Wayne is 29% discount. Now, interestingly, Indianapolis is only about a 19% discount as well, similar to Columbus. Maybe that market that's not quite so, it's a little more known to investors, and so the competition there is a little more fierce.
Interesting. Well, Darren, listen, I mean, anybody that is watching and listening right now, you need to go check out this PDF. It's going to give you a lot of really good information, especially about your own backyard. So go to auction.com/inthenews and download this PDF. It's super interactive as well. So click through, get the data, make some smart decisions, and then ask us right here on the Think Realty podcast. Darren, thank you so much for swinging by and offering some of your insights into what's going on in the market today. Thank you so much.
You're quite welcome. Thank you, Abhi.
You got it. Think Realty Nation. We'll be right back. This segment is brought to you by Narada Real Estate Investments, your premier source for cash flow investment property. Visit www.turnkeyrealestateinvestments.com. Next up is a quick little video clip from my good friend Ray Urrutia, and he has an awesome message about becoming the bank. There are a lot of folks in the investing space that want to flip. You want to buy and hold. But what if you could fund that yourself potentially? How do you become the bank? Here's Ray to talk about it.
Thank you so much for having me part of this meeting today. We're going to discuss, as being part of Pull the Trigger, one of the things we've been talking about is becoming the bank. And through that process, there are 6 strategies to implement it as the bank that you communicate with the servicer that will be set out their proper notifications and keep you in compliance, all things go with it. What we're going to talk about today is the first strategy, and that is how to work with the property owner. So once you bought the note, you've been through the evaluation period, you have it set up where with the servicer, what kind of communication you're going to be having, letters going out, notifications, all things go with it. And now you look at it and say, okay, this is what we need to do. So the first strategy that I like to follow is how to work with the homeowner to get the property reperforming. And a number of different steps you can take. One of the steps are to lower interest rate, depending on where they're at today. Another step is to reduce the principal. Another one is to work out a loan modification where they benefit because, again, you bought it because it's not performing. Because it's not performing, where are they at? What steps are they in? Are they a year behind, 6 months behind, 2 years behind? And if you bought notes in the past or looked at notes or people introduced them to you, one of the things that you realize is that if it's 2 years in arrears of non-payment, and whether it be the court system, the institution, whatever the process was that never got foreclosed, then you got 2 years of back payments, interest accrued, lawyers' fees, document recordings, all the things that go with it. So depending on where they're at right now, if they had a $100,000 mortgage, they could be almost, maybe they are exceeding the $100,000 in penalties and fines. Well, as a note owner, what do you do with that? How do you make that either work with in favor of the homeowner, in favor of you as a bank, and what steps do you take? Can you reduce that? Can you eliminate it? What can you make happen here to get that note reperforming? Again, the objective here of the first strategy is how do I get it reperforming because there's more value. And where that comes in is that the value at 50 cents on the dollar on a non-performing note, that's optimum. It could be higher. If it's 50%, and then you look at this and say, okay, if I get it reperforming, now I still have a $100,000 face value, and now I can sell it for 90 cents on the dollar, 90,000. It may take me 6 months to get there, but a couple things happen. One, I got payments recurring again. I have a solid consumer here buying the property, paying down the debt. And then lastly, I could pick up 40% in margin by getting reperforming. Again, it's just one strategy. So, the first step is make sure all the qualifiers are there. You evaluated it, you vetted it out, and that's the reason you acquired it. The second is, where are they at? Part of it starts with communication. And when you communicate with them, what are you communicating? As a bank, you have that flexibility, and also with guidance from the servicer that can also help you what is proper, what is improper. And then you start communicating steps and what can they do? What can't they do? Where are they at today? Where are they at mentally, emotionally? If they're mentally out of that property, then that's also a challenge. Then it always takes another strategy. But if they're emotionally still there, they've been there for a little while, and maybe they have children that are getting ready to graduate from high school. They got 1 or 2 years left. Maybe they don't want to move yet. Maybe they want to stay in the same school district. And that'd be another indicator of motivation for them to do something and to communicate. And part of the thing to remember here, I've been working foreclosures and short sales and loan mods for about 20 years now. I've knocked on a lot of doors. And one thing I've always found true is a lot of these people are scared. They're scared to open the mail. They're scared to answer the door. They're scared to answer the phone. And how can we, as we would become the bank, work smarter with them? That it's not about fear. It's about how we can assist, how we can help. And in helping them, we help ourselves as investors. So again, the first strategy is how do we get the paper reperforming again? And how do we get the homeowner comfortable with us through the communication with working with the servicer that they trust us to work with them and to make it proper. I'm not saying everyone's going to work that way, but that's a start. So first goal is getting reperforming. That's the first strategy. And you have a number of things you can do. You can, like I said, I'm going to reiterate, reduce the interest rate. So if they're at 6%, give it out at 2 or 3% if possible. That's a strategy. It doesn't mean that has to be part of it. Reduce the principal. So if it's 100,000, you could shave off 10,000, or in this case, in my example of 2 years and $100,000 in arrears, maybe you work with that number and reducing that number, and then the loan mod, add that towards the back end and extend the loan out. So that'd be another way of doing it. Or you can limit it altogether. It's choice. Decision you as the bank, and what is fair and proper, and what you're looking for to obtain out of the note itself. And a lot of times what you're looking for to obtaining it is get reperforming. One thing that I talked about in the past is the model of 10. For every 10 notes that you purchase, 6 will become reperforming. 2 at the top, probably do cash for keys, deed in lieu, and 2 the bond have to make a decision you're going to foreclose on them or sell them off if somebody has a specialty in that. But when you get a reperforming again, a lot of good things happen. You get a stable property, the property gets in better shape, they feel better about themselves as property owners. You can help them with their credit and things of that nature because of what the mortgage, how it affected it, and everybody keeps them moving forward. And then you, as becoming the bank, has the ability to reap profits off of that, and also to move on to the next opportunity, and then build your warehouse of not performing notes that you can do something later. We can talk about that later. But I appreciate the time and look forward to hearing any questions. Again, my name is Ray Urrutia. I am with the president and CEO of Pull the Trigger Enterprises, and we're an educational school and focused on becoming the bank.
Think Realty Nation, I learned a lot today, and I certainly hope you were taking notes, not only from my buddy Darren, but then, of course, Ray as well. There are a lot of things that we need to do as real estate investors, and one of them is understand the market, and then number 2 is get that next level strategy, especially right now. Hope you learned a lot. I did. Get in touch. Go to thinkrealty.com/podcast to watch amazing podcasts with some of my amazing friends and guests that we invite on to be a part of this experience to share with you. thinkrealty.com/podcast is where you get that. And you can find me anywhere online at Abhi Golhar. Until next time, happy investing. This podcast is brought to you by Roofstock. If you're ready to buy your next investment property, then check out Roofstock, the #1 marketplace for buying and selling single-family rental homes. Featuring tenant-occupied rental properties for sale in over 20 states, Roofstock makes it easy to invest in cash-flowing real estate outside your local market. And to help you invest remotely with confidence, all properties are backed by Roofstock's industry-leading 30-day money-back guarantee. Sign up for free today to find your next cash-flowing rental property at roofstock.com/thinkrealty.